Good evening, I'm Giuseppe Basile. I'm the asset trader you can find at the website www.fibstalker.com. I also post regularly on Twitter using the @fibstalker nickname. Good evening, today is Monday, March the 10th, 2014, and it's 20 past 10 p.m. In Toronto. In this video, I'm going to review for you three markets: the Japanese majors, Forex, and this video is a daily update. For a part of the 11 markets that I follow. And the three markets I'm going to review for you are the US dollar versus Japanese yen, the euro versus Japanese yen, and the pound versus Japanese yen. So I will start from the US dollar versus Japanese yen, and what you see on the screen is the daily chart of this market. Those who follow me know that I have identified program trading working on this market long on this in this area 101.53, starting from 101.50 area and down into 161, and price never pierced that level, so this long is still in place. And actually, as we can see here, this level, this area was actually respected 3 times now. And if you want to know why I trace from this level, please review yesterday weekly review I've sent to my free newsletter subscribers. You can subscribe on the website. And so starting from this market, then we saw participation at 101.53, and then market initially dipped below it, but then started respecting this level, as we can see, and price continued higher. And as I showed also yesterday, there was an important development here, because when we trace from highs to recent lows here, we can see that this spike higher we saw on Friday here broke this level, and this is a very important development, and that's a confirmation of long, it's a confirmation of strength for this market. Now, when we see this development, typically we also see a retracement, and there are different possibilities here for a retracement. Definitely a very good and high probability trade would be if market retraced into this 102 50 level here. Everything can happen. I'm not sure whether this is going to happen. In order to understand whether the sequence of measure move on this market is still intact, what I do, I study the sequence of measure move before we get an inversion, or in this case a break. And when studying this market, identify the number of traces here, highs to low, and again highs to highs. Sorry, I have to start again. These are two extensions, so again highs to highs, and as we can see, price went into first and second target, the same level traded, and we could actually see this from the participation of longs that we got at this 102.24. Price went again into 102.70 level, 102.90 level here, second target, and the next sequence, the next measure move in the sequence traded the 102.85 traded, and brought price again into first and second target. After that, the next sequence, the next measure move in the sequence failed here, and typically when that happens, it's a sign of that this sequence is now has now ended, and we are typically going to see a retracement into the old way halfway back, which in this case is from lows to highs. And yesterday I gave a trade which worked and produced a free risk trade at the moment, and this was highs to lows, and this trade is still intact. The 103.34 level here is still acting as a resistance, and we have a stop above 103.46 here, 45. And this trade, if it works, it has the possibility to bring price back into that 102.50 level of support here. If we don't continue higher, if we continue higher, the stop now should be above this size, just one pip, 103.41, 103.42. 41 is okay, and you would anyway exit with a small gain, which would pay for your expenses here. However, this is still a valid trade, so if you enter the trade, congratulations, keep it, and let's see if price will move into 102.50. Anything can happen here. Moving to the euro versus Japanese yen here. Again, I want to start from the daily chart, and here on the daily, we had support on this time frame coming from a trace, another extension long. So all this market actually look the same. And again, I'm not going to justify the reason why I traced this. You can review the weekly review on my newsletter to understand why I traced this and the validity of this trace. And we have here, we had two important developments. One was initially we had price respecting a short. So we got a program trading participation in this 136.60, and then price went into this 140.96. Although the path of least resistance on the weekly was long, we saw an initial move lower here, but then longs came into this market again, and as we can see, they came at this 138.70 level, and this pushed price higher and eventually brought that 142.08. So again, this is a confirmation of longs. It's also a confirmation of the targets of this 136.60 measure move, which we can see on the weekly. So it has targets above, and you can review you can watch the weekly video review for the Japanese majors in order to understand what's going on here. So as now this market went above 142.45, there's a possibility of this market to continue higher into 144.36, and then we should get a retracement, maybe an extension here for a continuation higher. When we study the 240 minutes, the 4-hour chart here, unfortunately we don't see a lot of structure due to this huge move higher here. So we need to actually study the 15 minutes chart in order to understand and try to make a little bit of order in this market after we had this move higher. So after we had this move higher, program trading stepped in again in this market, and it started the ruling market again, and we saw this level which started working here, and this level eventually traded again, and I'm going to show you the proof on price, because when we trace from this level to highs, we can see that this level was respected here. So we'll remove the lower trace, and this level is still there, has been respected, and has the potential to bring price into that second target, which we identify on the daily, which is this 144.36. So let's try and study on the 15 minutes if we change the scale here to see where price is being pushed. This is a traditional move, and the next target is 144.13, which would actually help price into that 144.36, which is the second target. So if price does not push below 142.83, we should anticipate a continuation higher here. So the stop, if you are in a long trade here, will be below 142.82 and bring price into 144.13. Moving to the pound versus the Japanese yen, I am going to start from the daily. We have a similar situation, similar trace here, which comes from a high, previous high, so it's an extension long. It's being respected by the market, and the difference here is that while in the euro versus Japanese yen we had a traditional trading and the 50% actually provided support to price. Here we had an extension trading, and this could only be identified after the fact, so there's no way I could use this information for trading. Just want to make that very clear. However, once we have identified this level of support, 168, 169 here, then we can keep using that level for the future. So at the moment, if we get a retracement here, we are going to see this market either to trade into the old halfway back of this move, and this will be a support at 171.21. Before 170.64, we are going to see the next extension, and this is going to bring price a little bit lower into this level here. So I don't want to make confusion here. The first level of support is 171.21. So if the sequence of measured move on the 15 minutes fails, and applying the VIP stalking technique for timing here, we see a break of the sequence of measured move in the 15 minutes around 171.20, then we're going to trade this on the long side with a stop below 170.64. If 170.64 fails, or we don't see any break in the sequence of 15 measured move, then this market is going to retrace into 169.50. I don't think that I think that this second possibility here, it's a lower probability a scenario, but still we have to consider it. So let's see what has happened on the 240 minutes here, and likewise we did for the US dollar versus Japanese yen. Here we're going to study the sequence of measured move. We have these highs, two highs, extension bringing price into 161.60, 161.90 here, and then we had again highs to highs, which actually captured the next measure move higher here, and we never got to the second target, though we barely got to that target. And but however you want to trace this failure, there was a failure in this market, and those are failures in this market, and even if we trace the same anchor to new high, we see that there was a failure here. And so where this market is going after the failure, this market is going to trade the old way halfway back, which is the level 170 level that I showed you before on the daily, and this is the it's 171.20 level. This is what this market is going to retrace to. Now there is a possibility before we get to that level that we get a full all the way halfway back here, and if that happens, this is a 172.55 with a stop above 172.80, 81 is going to be an high probability trade, which will bring price into right into this 171.20 here, and then we will need to study what happens. So if we get to 172.650 here, this is a short trade, and this is going to be a 25 pips risk for actually quite a good trade at 130 pips. So it's going to be a 5 reward to risk ratio if we get this trade. So it's very important to monitor this trade, and of course keep monitoring also what happens on the 15 minutes time frame here. as we said, we could get actually a retracement here, and so it's very important to study the sequence of measured move on the 15 minutes, which is actually the heart of the fib stalking technique. I hope you enjoyed this video, and I wish you a very good evening and a great trading day next tomorrow. Bye bye now.